These 4 real estate strategies literally changed my wife and I's life. It took us from 0 to 87 units. And I wish I had known these when I started investing in real estate. In real estate, like I said, the tax law wants you to buy real estate. So you get a deduction every year called depreciation. This can be a bit confusing, so I'll try to explain it in a very simple way. If you buy good real estate appreciates over time. It goes up in value, especially if you buy apartments that we can improve the NOI, net operating income. If I can reduce the expenses and I can increase the profitability, I can increase the income, the apartment is more valuable. That's why I like apartment investing more than single family, because for single family homes to appreciate, it goes off of the market and the economy, right? If we're in a deep recession and all the houses around you are selling for 30% less than market value, you're going to sell for 30% less than market value. Apartments, we could be in a recession and it might affect the valuation a little bit, but if I bought it and the NOI was $100,000 and now it's $300,000, my property's worth more money. It's just simple business economics, right? Every year, if you could buy good real estate, it should be appreciating in value. But the tax code allows you to take a write-off of what's called depreciation. It's like normal wear and tear of the building, right? They say, hey, every year, and I believe it's on schedule over 27 and a half years. So you can depreciate the walls, you can depreciate the structure of the building, the roof, the major the major mechanicals and expense of the building, the HVAC, the air conditioners, whatever, right? There's this law and this strategy, it's 100% legal, right? 100% legal, but it's called cost segregation study. What this allows you to do is hire an engineering company. Guess how much those cost, Nick? $5,000 on average. But saved me millions in taxes. They come in, they conduct a study of the building. They map out essentially all the mechanicals of the building, right? It allows you to accelerate the depreciation in your first year of ownership. Now, why would you want to do this? This is extremely valuable if you have a high income and you want to use real estate to offset that income. So in my online coaching business, one of my biggest and the biggest expense even for successful small entrepreneurs is taxes. I was paying upwards towards 40% of my income in taxes. So think about that. If you make $1 million, paying $400,000 in taxes, it's brutal. Started doing research. I'm I always hear the wealthy use real estate to avoid paying tax. So you don't avoid it, and you defer it. Dude, if I sold all my real estate, I have to pay tax. If I don't 1031, I have to pay all my tax. So it's the 1031's like the mafia. You're in it till you die, right? The expression is you buy till you die. Except when I turn 95, I'll probably just liquidate it all, take the huge tax in, just peace out to the Cayman Islands or whatever. You have a high income job. You're a doctor, you're a lawyer, you're whatever. You're a successful entrepreneur, right? You're a successful entrepreneur. You're making a lot of money. You buy real estate, you get to depreciate the losses, right? Which will lead us to our next tip. You got to have this thing called the real estate professional status. We'll talk about it. But cost segregation says instead of taking a little bit of this depreciation or this write-off over 27 and a half years, let's accelerate it and take a lot of it up front. So it's kind of do I want a little bit of a write-off every single year, or do I want a massive write-off this year? That's how we can buy real estate, and literally apartments, it could save us hundreds of thousands of dollars in taxes. Now, if I didn't have a high income business, I wouldn't need or really want that. But I had multiple 6-figure tax bill due every single year. Now with real estate, we don't have to pay that because that wipes out that taxable income. So again, defer to your CPA, talk to your CPA. What I'm trying to do is create awareness. I didn't know any of this when I freaking started, but this is a really good way to learn. If you're a successful business owner, if you're a successful entrepreneur, I think everybody should consider real estate investing. Even if it's not the majority part of your portfolio, from the tax savings standpoint alone, it's worth it. If we close on this 56 unit apartment, and I do a cost segregation, I'll probably have $1 million tax credit. And the best part is, if you don't use it all in your taxable year here, it rolls forward.
For how long?
Doesn't expire.
Infinity? Wow.
Until, knock on wood, they don't change it, tax law or whatever, but it will roll over until you use it. So I came into this year with a deficit on my taxes, meaning I have more of a tax credit because of depreciation than I owed. So you get to roll it forward. So I started off this year in the IRS basis negative. So I'm earning dollars in my business and I'm just building out of a tax deficit.
Wouldn't it be nice if the IRS were paying you?
They used to allow what's called recapture. So you could recapture some of your back tax, but they don't allow that anymore.
Of course.
My CPA was that is an ultimate easy way for them to audit you. I've never been audited, knock on wood, but we we do everything by the book. But guys, right, it almost feels like this is like illegal, but it's the tax code because they want to incentivize you to buy real estate. So it's the tax code. So that's why just education creates awareness. You have to become educated and aware. So the cost segregation study, you find an engineering company, they go out there, they do it, they prepare this like legal report for you. Your CPA files it. It's a legal by the tax law, by the tax code play, right? It's not like, well, is that a sketchy thing? And again, it's only on investment properties. You cannot cost segregate your primary house because you get depreciation on your primary residence, but it only works on investment property. Again, doing what the government wants. The government wants you to be an investor, not a consumer. The government wants you to create jobs, not just take a job. That's why large companies who provide a lot of jobs, they get major tax benefits and tax credits. What does the U.S. government want you to do? That's the game to play.
I have a feeling we're about to talk about Andrea. So real estate professional status. Let's talk about that.
The caveat to that third play, the cost segregation study, you have to be a real estate professional for you to be able to deduct the losses. Again, losses. So again, my properties are making money, but because of the accelerated depreciation, we're showing a loss. They are cash flowing, but we're showing a loss. Okay. Now, if I don't have the real estate professional status, it just allows me not to pay allows me to pay no tax on the cash flow generated from my investments. Because of the real estate professional status, it allows us to take the depreciation or the losses against our real estate against my active income. My active income is my business, right? Huge play there. It really works. And again, I'm not a CPA, so you have to ask, but it really works for like partners, right? Like husband and wife or whatever, married couples, right? Who one has a high income job or high income business, you invest into real estate, you get the person to become a real estate professional. Now you're probably wondering, well, what test do I have to pass? What class? None. There's no tests, no pass, or no classes, no certifications. It is literally, you have to spend, I believe, 750 hours or more per calendar year in real estate. Could be managing properties, finding properties. My wife is an agent, but you don't have to be a real estate agent, but you can't do anything else full-time. So she could like part-time work in my business, but real estate has to be her full-time thing. So to my knowledge, and again, you'd have to confirm this with the CPA, you can't be like, well, I have a full-time W-2 job as a videographer and video editor, but I'm a real estate professional too. You have to spend the majority of your time in real estate. That allows us to take the losses from our real estate. But remember, we're making money. We're making money. It's just on their paper losses. It's like the secrets of the wealthy. And they're not secrets because they're out there. Most people just don't know this stuff against our earned income. Once I learned that, dude, I was like, nothing else makes sense to me. Now, if I was only making $45,000 per year, is this going to help me? Not really. No, because you're barely paying tax as is. You're making $450,000 per year, $4 million per year. This is a game changer. Dude, I just found out Dave Chappelle bought like 26 houses in Akron, Ohio, I think. How do you guys think he bought those houses? You think he wants the cash flow from a couple houses, 26 houses? No, he wants to not pay tax. The very wealthy use real estate as a way for long-term appreciation, as a way to get cash flow, but the real reason they use it is to not pay tax or to defer or lower their tax bill, because real estate's the only asset class that will lower your tax bill. How do you save money on your taxes with stocks? If you lose money. How do you get tax write-off with cryptocurrency? You lose money. Real estate's the only asset class that you can make money, show a paper loss from, again, remember depreciation. We're just saying we'll take the depreciation up front with cost segregation studies and be able to take that loss against your earned income. Like, dude, when I found that out, I felt like I saw the Matrix. I'm like, why would I buy anything else? That's why I look at stocks and I'm like, okay, maybe long-term I would diversify and put a little bit in there, whatever. But for right now, I'm getting the tax benefit up front. So like my first apartment, I put, so $660,000. So let's put this in real world application. Bought the property, 7 units for $660,000. I put 20% down, $145,000. So I put $145,000 down. I immediately do a cost segregation study. I believe we got $150,000 in depreciation. So I put $145,000 down. I immediately get a tax credit off my tax bill because of the real estate professional status for $150,000. Is it worth it? Of course, it's immediately worth it. I improved the property. We increased the NOI. We made it more valuable. We did a cash out refinance, pulled out $250,000 because the property appraised for $1 million. I got my $145,000 back and then some in real cash from a refinance. And I got $150,000 or some change tax credit. That's the power of using these laws in real estate. So use another real world example. I'm like, I want more apartments, right? I want more apartments like everybody. Let's check the MLS. What's on the MLS? Nothing. What's on LoopNet? Crap. LoopNet and Crexy and things like that, these are deals that nobody wants. Not saying you can't buy these deals. These are deals that no one really wants. These are deals that have been passed over multiple people. Like when a broker gets a good deal, this is what happens. They go to their preferred buyer list first. They go to their email list next. They go to the other brokers in the office or the other brokers they know to split the commission. Then if nobody buys it, they put it on LoopNet or they put it on the market because it costs money for them to market it. So of course, why would they spend money if they could just sell it directly and keep all the money, right? You know, I'm looking on LoopNet, nothing works there. So just be aware of that with LoopNet. Could you find a deal on there? Sure, but you have to really find the diamond in the rough. So then I go and I Google apartment sales, Michigan. I didn't have CoStar back then. You have to pay for all that. And I start looking for brokers who did the sales. So what do you think I did, Nick? I pick up this thing called my cell phone. I start calling brokers. And I start telling them my elevator pitch, who I am, what I'm looking to accomplish, what my goals are, what my track record. And I said these magical words. Don't lie if it's not true, but I said, we are cash heavy, and we're ready to do deals. So people's attention sparked up. And I said, I own one apartment, right? At least it was something. It wasn't massive, but at least it was something. Got this broker named Tom. He had sold an 18-unit apartment on the market, on the MLS and Zillow. He's a residential agent, so that's what he did. I'm like, do you know of any more? He goes, actually, I do. Would you want to meet up? Sure. Want me to show you some apartments I know are coming available? Sure. He drove my wife and I around. It was really cool. Around a city, St. Clair Shores, Michigan here in Harrison Township. He showed us 4 apartment buildings. No, 5. 2 in St. Clair Shores. Well, 3 in St. Clair Shores, 1 in Harrison Township, 1 in East Point, Michigan. I bought 3 of those over the next year and a half. I was not like today, right? The other one in St. Clair Shores I would have bought, but it had like a massive balcony issue that would have cost $200,000. East Point's not a city I want to invest in. All off a phone call. I think we met at a Starbucks. He didn't buy anything. I bought him a cup of coffee sooner or later, right? But I came with the giving hand. I said, I want to do more deals. I'm an easy close. I'll transact. And he said exactly that. He goes, you know how many people I get calling me every single day asking for deals? He's like, you guys were easy to work with and you stuck to your word. You said you were going to close. We closed. That's the game. Now, let's say we wanted to take one of those 16 units and sell it to get to 100 unit. We're not going to sell it and take the money. We're going to sell it and put the money in a 1031 exchange. So we do not pay the capital gains. That's the real world application of this, guys. This is how you can use the laws and the strategies to build wealth. Remember, the US government wants you to be successful. The society, the economy wants you to be successful, but you have to follow the rules. The rules say invest in real estate, keep your money in real estate, give housing to the economy, give housing to the country, provide clean, safe, affordable housing for the country, and you're in a good spot. As always, be sure to comment, like, and subscribe. Our channel is growing, so we appreciate all the support, but we want more. So if you enjoyed the video, hit the thumbs up. Leave us a comment below. If you liked it, if you didn't like it, if you agreed, if you disagreed, if you have questions, if you want to see more videos explain more concepts, leave us a comment below. If you don't like Nick's editing, leave a comment below because he loves to read that. And hey, if you want to learn more about this, I want you to get my book, okay? It sells for $19 on Amazon. It's called The New Rules to Financial Freedom. You can get it for absolutely free as a digital download. So click the link below in the description, get the book for free. I go in depth into all these concepts. So it's something you can learn. You can show your wife, your husband, you can show your mom, your dad, other people, right? I want you to learn how to build wealth through real estate investing. Until next time, my friend, we'll talk soon. Thanks.